Hello viewers, welcome to our weekly analysis on forex trading. In today's episode, we are going to look at a very popular demand, which is trend lines, how to fix trend line on a live chart. Before we proceed, if you are new to the channel, please do hit the subscribe button and like our videos. We will move on straight after this brief intro. Thank you. Welcome back. So as we're saying, in today's video, what we're going to focus on is how to fix a trend line in a live chart. First of all, to begin with, in every business, in every trading opportunities, whether be it commodity trading or financial instruments, the primary purpose of it is to make profit, maximize profit and minimize losses. Okay, so this is why this very important tool, the use of trend line, to actually guide you on what you are doing at what time of the trading so that you minimize your losses and maximize your profits is very, very important. So what is trend line? Simply put, trend line is just a straight line connecting 2 points. Okay, it is a straight line connecting 2 points on a chart. Now, having said this, how do we fix these trend lines? How do we fix them? So first, before I show you on the chart how to fix the trend line, let's discuss how many type of trend lines there are out there. There are two basic type of patterns. You either have the continuation pattern or you have the breakout pattern. Continuation pattern is where you fit a trend line and it guides you that this market trend is still in an upward or downward trend. While breakout pattern is a pattern that shows you that the trend you are riding on is about to has come to an end. Okay, we will look at these two different types on a live chart very soon. Let me change my network, load the chart, and then we'll begin to work on this. I'll be back shortly. So as I was saying, now I would show you the two type of trend lines on a live chart. What do we mean by, as I said, trend line is only possible in a diagonal market, whether it is going upward, as in moving from left to right like this, or is going downward, moving from left to right like this. So this is a trending market. You have the third one is a ranging market where it is going, the direction is horizontal, left to right, horizontal. So this is a ranging market. I will show you this on the chart now, how to determine them and how to actually take advantage of them in your trading analysis. Now, this is the normal chart we are all familiar with. To place this, let me delete this off first and draw it afresh. This is a moving chart of BTC USD. Okay, so here let me move to a bit higher time frame. Yes, okay, as we can see here, what you do is, if it's in a trend, if it's trending upward Okay, you could see this is sideways, right? If it's trending upward, where you place your line is below the moving chart. Okay, you join the lines below the moving chart in a trend. That is the point you have to join is below the moving chart. And what you do is that look out for where the point where the line you fit touches the candlesticks mostly. That is the more effective place to place your trending line. Okay, for example here, if I pick a line here, this is like low. Let me look at this point because it started moving up here. The lowest wick here, which is here, I place this, then I try to fit this. Okay, this is, if you look at this, I had from this touch, I had another touch here, I had another touch here, even though this breakthrough. What this denotes is that every point is a trading opportunity. Every touching point of this line is a trading opportunity. It's not, let me go back lower. I need where I can see multiple touch points. Okay, so the best, this is a line of best fit here because it fit exactly where it tells me something about the chart itself. Here again, if I look at this is in 1 minute time frame, and it's on all time frame. You can fit it. You can fit it on all time frame. It just tells you a change in market direction. Here, from here, it touches here, touches here. Then, as you can see, there is a break here. So what we don't know yet is this break the one that will see us downward, or it is a break that is just a retest and then it will move on. So these are different ways to read charts. Let's look for example of another type. I'm looking for another example. Okay. Yeah, it's auto lock. Okay. Here, as I said, if it's in the downward trend, where you try to, the network is really slow. If it's in the downward trend, you will try to fit your line on top because breaking it will be breaking upward, right? In the downward trend, you are having lower low, lower high. So, or you place it along the lower high. You join the lower highs. Network. The network is so you will have to join the lower highs. Then because you are looking for a break back into the other direction. Okay, why am I not getting this? Let me see. Let me use XAUUSD. At least it's not a live one now. Still the same. So let's try to fit these lines here on this one. So here, as I said, if it's in the uptrend, you are expecting a break downward. If it's in the downward trend, you are expecting a break upward. So in the uptrend, in this case, you put your line on the lower high. So here, sorry, on the higher low, you have this. Let's place this one like this. This is higher high, higher low, higher high, higher low. So on the higher lows here, that's where you put your line of best fit. Then if you look here, this is a downtrend. Expectation is a break upward or the other. So you put it on the lower highs. I mark here, then I join it along these lines. So and as I said, the way it has more touches is better. So what this means is that when you are trading lower low, the lower high is expected to break through this. When it rebounces back from that position, that is your entry point. Each time it rebounces back is your entry point. So you take a shot here, then as soon as it gets to this level of retouching, you exit. Then once it's coming back, it's breaking through again. Maybe you see the first engulfing candle, take a shot again, and it's getting here, you exit. This is when if you are scalping. But how do you know that this run of the lower trend run is ending? Is when it exits it and then retouches it again to continue. So that time it shows that your expectation of lower low, that is your expectation of the downtrend, is over. Then there are other tools apart from this straight line tool to actually fix this. And note clearly that this does not work. You don't use this on a ranging market. The way you use it in ranging market is different from the way you use it on trending market. In ranging market, for example, if it's sideways, that is when I say ranging now, I'm talking about sideways. It's moving sideways. What you do is that you use 2 of that instead of 1. You join all the highs, then you also join all the low points. In this case, for example, here, parallel to each other. Okay, so your expectation is that because it's ranging, which you don't also know how long it's going to range, if it leaves here, it's coming down here. If it leaves here, it's coming up here. So in between the boxes, until it forms a diagonal movement, either upward or downward, before you begin to take market opportunities. We've always said it that for you to enter a trade, look at the downward structure from the weekly, daily, and determine the trend. Use your line of best fit to determine the trend. Then you enter your positions and make sure your entry positions perfect, and these are called sniper entries. Your sniper entry positions are at the reversal point of the trend. Okay, now having said this, what other there are other tools that, instead of, even though it's a downward trend, like you see here now, this forms a channel. If I put another one here, because I joined the lower highs, right? I can equally join the lower lows to give me a channel, right? This is lower low here, just to give me a channel. It gives me an idea of when to expect possible exit point before if there is going to be a reversal, before the reversal begins. Okay, so what happened here is that you could use another tool in here. There are various tools that you can use for this channel, the various channel tools. So this is the simplest one. The second one is the parallel channel, where you do this just in one shot. If you are using trading view, this is the that's the icon. If I do this, you just drag it then it position it for you perfectly, equal part. Okay, so if I want to use it here on this one, take the first point here, join it to another point, drag it down, then here you see it fits perfectly, meaning this is your trading channel. The market price will be moving within this channel. Immediately it's breaking out of the channel, then you know you have a change of character. Okay, then you also use it to trend this one again. Let's look at it. Okay, here again you can use same here. This is the high here, joining with this one, then like this. So this is the trading channel here. It breaks it here, it retouches, so it's out of this channel. Let's look at it in this one. You are taking it from the lows, then you have this, so it's trading within this channel. Checking here also, I have this, I have this, I have this. Immediately it get out here, it begin to form another one. Similarly here, join this line, join this one, move it to the lowest low. So this is the channel you are expecting it to break. Immediately breaks this channel, then you are in for another trade. So this is how to use the this is how to use the channels to determine what direction your market is going through. Okay, so basically this is it. The other thing is you don't use this alone to determine market entries. You don't use it to determine market entries. What you usually do is that you use it with other confluences to tell that, okay, now I can take a trade or otherwise. So this is where we will stop the video for today. If you give us your thoughts about this video. If you need more tools for us to also work on, please share it in the suggestion box. Then we will actually proceed to make a short videos for you to make on how to use the tool to do your trading. So happy viewing, and then looking forward to next week where we'll be taking another tool to do a quick video upon for us to learn from. Thank you. Bye bye.